And we're happy to welcome to our studios K.C. Chan. He is Secretary for Financial Services and the Treasury with the Hong Kong Special Administrative Region Government. Good of you to visit us at TVO. Thanks so much.
Hi, Steve.
I suspect most of our viewers know where Hong Kong is, but oftentimes when we do a faraway place, we like to put a map up. So we're going to start with our map and show people where in the Far East you are. And then once they see you situated in the neighborhood you are, Japan, North Korea, South Korea, Eastern China, we'll get to some facts. Here's some facts on Hong Kong. 7 million people is the population, ethnically 95% Chinese. Cantonese speakers, almost 90%. The literacy rate, over 90%. And of course, in 1997, you, I guess, ended your special relationship with the United Kingdom and became a special administrative region of China. All of that according to the CIA fact book. And now pertinent to our conversation that we're about to have, global financial centers. Here's how the City of London rates it all. London, of course, #1, New York #2, and there's Hong Kong #3. And down the list, number 13 is Toronto. I think we're working our way up the list, but we're not close to Hong Kong yet. So let's do the background here. Tell us how you think Hong Kong became one of the top 3 financial centers in the world.
Well, I'll give you 2 facts. One is Hong Kong is situated right next to China in terms of geographically, but in terms of the economically and politically, we're a part of China. So that gives Hong Kong tremendous access to the investors, to the companies in China. And
so it's good to be close to China, but not part of China, so to speak.
Well, we are part of China. We are part of China, but the important thing is that we also have a system that's very different from China.
That's what I meant.
You know, in terms of a legal system, in terms of financial market. As you know, Hong Kong has a same sort of common law regulation, just like Canada, Australia, UK, and so on. So that gives Hong Kong, the financial market, the kind of regulation that companies want.
I think there were some people who thought Hong Kong would lose its financial edge once it became part of China in 1997. That didn't happen. How come?
Well, China is doing well, economically doing well, and China respects the system that Hong Kong has. And Hong Kong is able to use the system on financial market to help Chinese firms raise money. So when China gets bigger, and Hong Kong benefit from that.
Are you surprised that the Communist Party left you alone, so to speak?
No, I mean, look, I returned to Hong Kong in 1993,
You were over here, I was
in the U.S. for a long time.
You were at Ohio State University.
I was teaching at Ohio State University. Yeah. So I returned in Hong Kong in 93 because I think Hong Kong is a good place to raise a family, and we do well.
Let's do a couple of different comparisons here. I want you to talk to us about the strengths of Hong Kong and its financial sector. First of all, compared to some of the bigger names that we would know in China, compared to Shanghai or Shenzhen, other major financial centers in China. How does it do?
Well, Shanghai is a great city. Shanghai has a great future as a financial capital of China. Number one, Shanghai has always been the capital in terms of financial and economics for China. And as Chinese company wants to raise money, Shanghai would be providing that kind of liquidity, in RMB, for the Chinese firms. But China is a closed market. The capital account is not open. So when a Chinese firms wants to raise capital or reach international investors, they can go to Hong Kong, London, Toronto, in fact, But because how Hong Kong geographically, culturally is very close to China, so we get a good share of the business.
Okay, so that's the comparison to China. Let's do the comparison with those other places now. Yeah. We've heard of Nylon Kong. I mean, that's what people are calling New York, London, Hong Kong now. The comparison to those other 2 places, how do you think Hong Kong does relative to them?
Well, Hong Kong is a globalized market just like London and New York is. In terms of size, of course, Hong Kong is smaller than New York. We are getting closer to London, hopefully, in some times in the future. London is a very good market. London has tremendously diversified financial services. Hong Kong is a very good equity market because of so far the services we have been paying, performing for the Chinese firms. But one thing that's very, very common is that both Hong Kong, London, and New York share a very similar set of regulation and a legal background. So these cities will compete and will do well, serving our different clienteles.
Tell me about the differences in terms of weathering this global recession, because of course New York and London have had some pretty tough times during this. How has Hong Kong weathered the Great Recession, as we call it over here?
In one area, we've done very well, which is in terms of financial system. Hong Kong banks are very well regulated, just like Canadian banks are. So none of the banks, in Hong Kong actually need any problem, need any help from the government. The capital of these banks were high, and we haven't suffered financially like in some other countries. So Hong Kong had a very good basis to recover from. And in fact, last year we did quite well in our economic performance. In the coming year, we expect Hong Kong to grow between 4% and 5%. Our unemployment rate has come down from the peak of recession. Right now it's 4.8. It might come down a bit in a year, but so far I think Hong Kong has done well.
Okay, let's do another comparison here versus Shanghai. And we're going to show a chart here of the total value of share trading as of January 2010. Shanghai, 425 billion US dollars. Hong Kong exchanges, 154 billion US dollars. Why such a big, now if Hong Kong is still bigger and it's still the place people want to do business, why is there such a disparity there?
Well, the Hong Kong, Shanghai is a big market. There's a lot of, Hong Kong is a big market too. But Shanghai has a huge amount of RMB liquidity. People, in China actually save a lot and they invest in the stock market. And there's a lot of retail investors in the Shanghai market. Hong Kong has a different kind of clientele. We have both retail investors, institutional investors, and we have local investors and international investors. So in terms of the trading characteristics, this market is very different.
Gotcha. Let me read you a quote from Andrew Ross Sorkin in the New York Times, and then we'll come back with a question. Considering that Shanghai had no stock exchange just 20 years ago, the city has come a long way. Measured by market capitalization, its stock exchange is already bigger than that of Hong Kong, and with initial public offerings of Western companies at a crawl after the economic downturn, Shanghai and Wall Street are increasingly vying to grab share listings of Chinese companies. The Chinese government, of course, is actively promoting Shanghai as a global financial center. So, as companies look forward, why should they not just bypass Hong Kong altogether and go straight for Shanghai?
Well, if you're talking about Chinese domestic firms, they choose to go to Shanghai and Hong Kong because the two markets offer different kind of investor clientele and services. We have successful listing of all the major Chinese banks in Hong Kong, and because in Hong Kong they can reach international investors, and they would be subject themselves to a different set of regulation and corporate governance that is trusted by international investors. And Hong Kong and Shanghai will always be complementary each other. I think the Chinese firms discover that they can get the best of both worlds in Shanghai and in Hong Kong.
You don't see a time coming, perhaps soon, where Shanghai becomes so transcendent that Hong Kong gets left behind?
Well, I hope Shanghai will be doing better than now. I hope Shanghai actually will increase their financial services, because if Chinese firms do well in financial services, some of their business will come to Hong Kong. Hong Kong will provide the international financial services that Shanghai at this moment cannot provide.
So what's good for them is also good for you,
Absolutely.
You think? Let me talk about your money. I've heard your Chinese currency referred to in two different ways, the renminbi and the yuan.
Oh.
Which is preferable?
Both.
They're both right.
They're both right.
You both say it. Okay.
Yes.
What does the Chinese government, you're watching this obviously very
Yes.
carefully, what do you think they want to do with the currency?
Well, I think the Chinese government, of course, at this stage, under quite a lot of pressure from different trading partners on the exchange rate appreciation. Now, the Chinese government has been, maintaining the stability of the currency, and that's very important for the economic development.
But not at a place where the Americans, for example, would like to see it.
And during the Great Recession that we just saw, the Chinese government pumped a lot of money into the economy in order to boost the economic growth and provide the stability to both China and in Asia. So they've done tremendously well. And in terms of the imbalance that people talk about, in China or with the trading partners, I think it takes more than just exchange rate. It will take a lot of the domestic economic restructuring that China is committed into doing to really address the imbalance.
But exchange rates are hugely important. We remember in Canada when our dollar was at 65 cents American, we got a lot more Hollywood movies made up here then, right? Exchange rates are important.
Yes.
And I mean, is the Chinese, are they undervaluing their exchange rate too much?
Well, what we should look at is the Chinese exchange rate policy has been very consistent, it's very stable, and it has done very well in terms of providing that stability, in that region, and not just for China. I think both in Asia, people who are trading with China, people who are depending on Chinese economic growth, that stability is very important.
Do the Chinese worry about ticking off the Americans too much because their exchange, the value of their currency is so low compared to the American dollar?
Well, I think the Chinese has a very difficult, task on their hand because the Chinese economy is huge, and when we're talking about the wealth of China or the economic emergence of China, we should not, forget, China still remains a very developing country, with a with a vast part of China that is still, earning very low wages, and China recognized that internal imbalance, and so he really is trying to use a lot of domestic fiscal policy as well as various types of infrastructure spending in order to really, carry, the poor part of China up on the economic ladder. So it is a difficult problem on the hand.
Sure. So should the message be lay off Western world? We'll get there, but just not yet?
Well, I think China so far has been, working with all the international partners, both on exchange rate as well as on the other policies.
Now, you've got your own currency too in Hong Kong, right?
Yes,
the dollar?
Hong Kong dollar.
Hong Kong dollar. Do you see a time coming when you will no longer have your own independent currency?
Well, Hong Kong dollar is a very well accepted currency. Mm-hmm. We have number one, we have fully convertible. For a long time, we run a currency board, which means that we peg our Hong Kong dollar to U.S. dollars. Now, it's not all at times we have some inflation. For example, when U.S. dollar is trading at low value. But this exchange rate serves Hong Kong well, and I think Hong Kong will maintain this exchange rate system.
I want to ask you about Hong Kong as a kind of an incubator for economic ideas that, can be transplanted over to the mainland. Do you still see Hong Kong performing that kind of function going forward?
Well, Hong Kong is, we look at Hong Kong's succession, in moving from one type of economy to another type of economy. We were a manufacturing economy in the past, slowly we're becoming a service economy, and now a financial center, in Asia. Mm-hmm. And in all this transition, a lot of innovations, a lot of ideas, are developed in Hong Kong, and Hong Kong has always been, maintaining, a very strong relationship with China. Hong Kong is the largest FDI, foreign direct investment provider to China, and our professionals have been working in the Chinese industry, Chinese cities, and I think Hong Kong will continue to bring everything that we'll innovate on and the Western ideas into China.
Okay, let me ask you one last thing then. Wall Street has a definite brand. Right. London has a definite brand. When people think of Hong Kong, what is the brand you want them to think of?
An efficient government, efficient regulation, access to China, and a good place to live.
And a good place to live. You still want people moving there, eh?
Oh, absolutely. It's a good place to live.
It's a pretty dense place to live, though. You got enough room for everybody?
Well, it's a dense place to live, but Hong Kong has, if you have been to Hong Kong, you'll be wondering, why, Hong Kong has been described to be a very dense place to live, because we have a lot of culture, and we have a lot of nature in Hong Kong. We have beautiful water, we have beautiful mountains. Hong Kong's a good place.
But last I checked, no hockey team yet.
We have been getting a few of those. I think a lot of Canadians, working in Hong Kong, actually starting their hockey teams. And we have a lot of ice rinks in Hong Kong now. We're very popular with the Hong Kong citizens.
We will look forward to seeing you in the Olympics someday.
Absolutely.
Okay.
Thank you.
Casey Chen, it's good of you to join us at TVO. Thanks so much.